Hey, welcome back traders. This is part 2 to my backtesting guide. Now I'm sorry it took so long to give you part 2 of this guide. I was on holiday and well, life basically. But in part 1, I went over reasons why backtesting helps with your trading, and I gave you an example of a backtesting model, which includes considering the time of day, your setup criteria, your entry, and risk management. If you haven't seen that yet, stop. Go back, watch that first, then come back to this video. Okay, so now if you're here, then I hope you've taken some time to build your own model and have everything written down in front of you, because in this part 2, we're going to use our model to do a backtest example, and I'm going to go over what data you should be recording. I'd like to ask you to give this video a like and subscribe for my future backtesting videos. I plan to use the model I gave you to backtest the entire year of 2024 and analyze the data. But let's first show you a backtest example, and I think it's better if we start with the data so you can get an idea of what we'll want to keep track of. Now you may be wondering how you can record your data. Well, there are countless journaling tools out there that you can pay for that will do most of the heavy lifting for you. TradeZella is an example of one, but there are many others. Now, I'm not recommending TradeZella. I'm not affiliated with TradeZella in any way. I don't get paid by them, and personally, I don't even use them. I don't even know any of the features they provide. I'm only mentioning TradeZella because it's the one that gets advertised to me the most, and I just want to let you know that you can pay for a journaling tool online. Now, if you want to go the free route, you'll want to either create your own database, or what I like to do is simply use a spreadsheet. You can use Google Sheets or whatever free spreadsheet app you like. But I'm going to use Excel, and I'm going to show you how to track your data in that before we get to the actual backtesting. So here's my spreadsheet. I divided it into 2 sections. I freeze the first 4 rows to use as my headers and general calculations. Now, this isn't a guide for Excel, so I'm not going to go over how to freeze cells or how to write formulas, but I will try and show you all of my formulas. The gray cells with orange text is going to be the ones with formulas. Obviously, some are just headers, but if I do use a formula, it's going to be gray. The white cells are going to be where I need to fill in with data, so these are going to be the things I want to note as I backtest. Right now, I just have some dummy data here just for demonstration purposes. I've increased the font size here, so hopefully you won't have any problems seeing it, but starting with the date, I want to keep track of this so I can break it down in the stats later on and see how the model performs on a monthly basis or weekly basis. We can even break it down to days of week, so Monday, Tuesday, Wednesday, Thursday, Friday, and maybe we can see some pattern on how the model performs on certain days of the week. Price per point, this is not really necessary if you're just going to trade with one index. You can work this into your formulas, but I have a column here so I can adjust for when I trade S&P versus NASDAQ. But for this backtesting series, I'm just going to stick with NASDAQ micros, so it's going to be $2 all the way down. Next column is direction, 1 for longs, -1 for shorts, and this is basically just used for calculations. I've added some custom formatting just to quickly show if I went long or short, but this can also be used later in our analysis to see whether the model works better going long or going short. Then I have a bunch of calculations, but I want to finish going through the data inputs first, and then we can go back to the formulas. The next few are number of contracts, entry price, and risk price. So these are going to deal with the entries. To keep calculations simple, each row is just going to have one entry. There's no column to add into a trade. If I want to add, I will fill out another row using the same date. But I think for this backtesting, I'm just going to keep it simple with just one entry, no adding. And the risk price, just to clarify, is going to be the price of my stop loss. Then I have my exits. I have 3 to allow me to take up to 3 partials. If you remember from the model, full closure after 3 partials. So it's just what price I close at and how many contracts. If I get stopped out, that exit will go here as well. The next column is max drawdown price. This is going to be the price of where we had the most drawdown before the trade goes our way to our first partial. Now, all the previous data fields, date, entry, and exit, I think should all be required. This max drawdown is the first optional data point. Now it's going to help you see how much drawdown you'll need to endure, which will help you to not be afraid during a trade. But if that's not something you want to work on, or if you don't care to see this, then it's fine if you opt out. Next is trade duration, how many minutes from the entry to full exit. Another optional column, take it or leave it, but having this will help you see how long your trades normally take and can help you work on being patient. The last column I have is comments. This one's for noting down anything significant during the trade, either in price action or your mental state. You can write down how you felt during the trade, what you think you need to work on, pretty much anything. Again, another optional column, but I highly recommend having this one because you're leaving notes for your future self, which can help you improve your trading psychology. Okay, so now let's quickly go over all the calculations. You can see the formulas here. If I go too quickly, you can pause the video to note it down, but starting with the account total, this is going to be a hypothetical current balance. I'm starting with a hypothetical $10,000, and then below it, I'm just adding to it the previous net, which will be the P&L after fees. Total risk is how much risk we have on the trade, and I have both a dollar amount and a percentage of the current account balance. P&L is going to be the profit or loss before any fees. You can see this in the formula. I'm not using the H column, which is the fees. The fees column, I'm just estimating commissions and broker fees. I'm using 1.75 or $1.75 per contract. I think this is like the average, I'm not sure, but you can use whatever you want here. $2 or whatever commissions and fees you're seeing with your broker. Net is going to be the P&L minus the fees, pretty simple. Total reward to risk ratio, this is how much profit you made compared to the risk you took. It's going to be the P&L divided by the total risk. Then above here is pretty much where I have all my averages. Expected value is the dollar amount you can expect per trade. Winning percentage is how often we have a P&L greater than 0. Average gain, average loss, average risk dollar amount, average risk percentage, average P&L, all pretty self-explanatory. Same for the total fees. Average net and total net is going to be these two respectively because I want to see both. Average reward to risk ratio and average number of contracts. Now this one may not be very important because the number of contracts is based off the risk, but I have it here just in case. Don't know if I'll actually use it or not in the analysis. Then the risk here and the average risk. I'm not taking the number of contracts into account because I just want to see how wide of a risk the trade has. Then for each partial, I have a separate reward to risk ratio just to see the R's for each partial. Total max drawdown, I have this in R's rather than in dollar amounts, so this will be anywhere from 0 to -1, but if you rather have a dollar amount, then go for it. Average max drawdown and average duration. Again, I apologize if I'm going too fast, but you can pause the video to take a look at each individual formula. Okay, wow, I know we didn't go very long, but I did not realize there was so much information to go over just in the spreadsheets, especially if you want to pause and look at all the formulas. I feel like I might have already given you a lot if you pause to analyze each formula, so I hate to do this again, but I think this is going to be a good point to take another break. I want you to review what we went over and think about what data you want to track for your model. It may be something that I did not mention. Pause the video at certain points to note down my formulas. If it was confusing in any way, let me know in the comments and I'll help clarify. Also, I don't see many other traders give you as much detailed information as I do, so I appreciate it if you could give this video a like and subscribe because I promise next time I will be showing a backtesting example, but in the meantime, build your own spreadsheet or whatever journaling tool you want to use and make sure to bring it along to the next video. And until I see you guys and girls next time, safe trading.